Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. When we look at the European markets and compare them to the US equity markets, there is a clear disconnect between the two. Because over in Europe, as you can see in the chart, the DAX index is still very much maintaining its momentum. It is still moving to the upside because European traders are picking up the momentum where investors left off things over in Asia. Because when we look at the Asian session, there is this harmony of gains across all the Asian indices, whether we are speaking of the Japanese, Shanghai, Hong Kong, or the Korean Kospi index. All of them, they closed in positive territory and investors are building on these particular gains. But the disconnect is when we look at the US futures, because US markets spent most of the day in negative territory yesterday. Only in the last hour we've seen this shift in momentum and the odds really started to stack up in favor of bulls, and that was primarily, the rally was primarily led by tech stocks, especially by Apple, which recorded another all-time high yesterday with respect to its stock price. But investors are still very much concerned, especially over in the US, about this increase in coronavirus numbers. Because on Tuesday we had the record high new cases for the coronavirus over in the United States, because the new number posted, the new coronavirus cases surged to 60,000 over in the United States on Tuesday. Now, of course, Donald Trump is saying that the death toll has reduced by tenfold, but that doesn't really sit well with the US chief scientist who is continuously warning investors and of course the public, more of a public, that do not find comfort in this falling death toll, because the coronavirus cases and the new cases are still on the rise. And especially what he said is that over in Europe, with respect to coronavirus, we've seen this coronavirus curve surging and then returning to its baseline. But over in the United States, we haven't seen the curve leveling off at all. We've seen the curve surge and then a little pause, and now once again we're seeing those numbers surging, because as of yesterday, new coronavirus cases have increased by over 2%, which is more than the 7 days average for coronavirus. Now, of course, there's another element which is also playing an important part in terms of investor sentiment, and that is the important economic data. Today, we are going to get two important readings, that is your initial jobs and continuous claims with respect to the US economy. Of course, the forecast is that these numbers will see some sort of a retracement, and the downward trend that we are seeing for the last few number of weeks will continue to remain in place. Well, if that happens, that can certainly help as a new catalyst for the Dow Jones index, as you can see in the chart, can really break above its 200-day moving average, because right now it is losing that battle against this average. If that happens, then yes, we can see it. Now, shifting away from the equity markets and moving into commodity space, it is all about gold. Remember, we talked about the target of 1800. Gold prices, they crossed above the 1800 mark yesterday, and now the door is wide open for the bulls to target the all-time high of 1923 that we haven't seen since the financial crisis. Because remember, this particular bull run, the momentum that we're seeing in the commodity space, especially for the gold prices, we haven't seen anything like that since the financial crisis. And now traders are going to push the prices towards its next immediate target, which is the psychological resistance of 1850, followed by the 1900 price level. That's all for today, folks. I'll see you guys tomorrow.